People look at this and say, okay, Warren Buffett is putting his stamp of approval on investing in Japan, basically. Is that an accurate read?
Well, it was an accurate read, but it was an accurate read a couple of years ago, too. I mean, I was confounded by the fact that we could buy into these companies and, in effect, have an earnings yield of maybe 14% or something like that, with dividends that would grow. They actually grew 70% during that time. And if that doesn't look like something sensible to me, that's as easy as it gets. But it's turned out to be better than I thought it would be.
Warren Buffett has made $4.5 billion from his investment in Japan. In April this year, the savvy investor went to Tokyo for just the second time of his life to meet the owners of those Japanese trading houses. Buffett went there to show his support to the Japanese trading houses whose shares he owns. He just wanted to meet the leaders of those companies, to talk to them and to discuss their businesses.
And flew over, and we have had a terrific time meeting each of the five sequentially over the last 2 days, and it's been fascinating. And we feel even better about but we couldn't feel better about the investment. And
this comes after Buffett broke through Japan's value trap to make profits of the usually stale Japanese stock market. You can see on the chart that since Warren Buffett bought shares in those 5 Japanese companies, all 5 of their share prices have at the very least gone up by 50%. The highest gain was from Marubeni, which had over 200% returns. Warren Buffett bought many Japanese stocks during the pandemic. In 2020, borrowing money in Japan was cheap. Buffett borrowed millions of dollars in Japanese yen at record low interest rates, so he could use them to buy large Japanese company stocks, whose share prices had fallen tremendously because of the pandemic impact on Japan's economy. The 5 Japanese companies Buffett partially owns are Itochu, Mitsubishi, Mitsui, Sumitomo, and Marubeni. All of them are household names in Japan. Some of them were seen as either Zaibatsu or Keiretsu companies at one point in history. These are companies that have dominated Japan's business interests for decades. Each of them have interlocking business relationships with each other. In addition, each one of the Japanese trading houses are like conglomerates with different businesses under their umbrella. For example, Sumitomo, a company whose shares Buffett bought, sells chemicals, machines, insurance, cement, offers warehousing and transportation services, and is heavily involved in construction. Itochu, another Japanese company Buffett partially bought, owns the famous Family Mart convenience store, along with businesses from food to IT. The rest of the companies Buffett bought are the same. They hold business interests and make profits from multiple different sectors of the Japanese economy. Warren Buffett explains it's the diversity of the businesses that drew him to the Japanese companies. They own a lot of different things. It's very similar to the structure Buffett has made for Berkshire Hathaway. Another reason to buy Japanese companies are their share buybacks and high dividend payments, hovering between 3 to 5%. The number of those shares going down during and after share buybacks usually raise prices of the shares, which works in Buffett's favor. Buffett owns around 6 to 7% of each of the 5 Japanese companies. Warren Buffett told the Nikkei News Company that he was planning to buy more shares in Japanese companies. He's preparing another volley of yen-denominated bonds so he can borrow more money from Japan to spend on more Japanese stocks. After Warren Buffett's green light for Japanese stocks, many investors are following suit. Ken Griffin and Steve Cohen, who are billionaire investors in their own right, have taken steps to invest more in Japan. Steve Cohen said he would hire more staff for his hedge fund's Japanese operations this year. Ken Griffin is taking things a little more drastically. The billionaire is planning to reopen his offices in Tokyo, the same offices which had been shut down since the 2008 financial meltdown. Blackstone's chief executive, Steven Schwarzman, had a meeting with Japan's prime minister regarding investments in March. After Buffett's win in Japan, more and more Wall Street analysts are pointing out deals in the land of the rising sun. For years now, Japan's company shares have been undervalued. After Japan's financial boom came to a close, Japan's stock market has been dead. Shares of many Japanese companies have been flatlining for decades now. For a long while, the Japanese market has been known for cheap assets and shares available at a discount compared to other stock markets across the world. All of a sudden, Japan's cheap valuations are under scrutiny again. More hedge funds are eyeing Japanese companies' low PE ratios and saying they might really buy some Japanese Japanese stocks soon. With China off the table because of geopolitical tensions between the US and China, investors are looking for more ways to invest in Asia. Japan may be it. Warren Buffett himself sold TSMC shares because of US-China tensions. So far, Warren Buffett has mentioned how proud he was of his Japanese portfolio. While Buffett only has shares in 5 Japanese trading companies, he says there are always a few he's thinking about. Buffett has said he would love it if any of the 5 Japanese companies he partly owns came up to him with a specific deal in the future. Warren Buffett already has around 7% of those 5 Japanese trading houses. He mentioned he wouldn't buy more than 9.9% of the shares unless the board of directors of those Japanese companies gave the green light.
Berkshire would never buy more than 9.9% without their consent. And that was my word. It was Berkshire Hathaway's word, and they all welcomed us in, and their results have exceeded our expectations.
Buffett looks for classic value plays in the market. His next investment in Japan may be in companies which have a strong cash flow but trade at a discount. Thank you for watching. If you enjoyed the video, subscribe for more videos like this one.